Now let's turn to rare earths, heavy rare earths, and specifically dysprosium. I don't know the periodic table number for dysprosium, but our next speaker will, to share the latest on the Browns Range project. Please welcome the Managing Director of Northern Minerals, George Bauk. G'day, George.
Thank you very much for the opportunity to speak, and congratulations to ResourceStocks for the presentation of the conference. So today I'll talk about dysprosium and where we're at in our journey in relation to Northern Minerals. We have our usual disclaimer. For some of you, you'll remember that Rare Earths 1.0 was back in 2011. The price of rare earths went through the roof when China had a dispute in the South Island with Japan, and prices just went to ridiculous levels. And the negative outcome of the rare earth boom and bubble at that time was a bit of destruction of demand, a lot of people looking at alternatives. We're now seeing Rare Earths 2.0. The President of the United States signed an executive order in December where they're looking at the supply chain of critical metals and making sure that they don't have a reliance on China and looking to re-establish their own supply chains. And in the middle of that was rare earths. Our Prime Minister went over to the US in February and signed an MOU with the US government to look at ways in which we could work together to solve some of those supply chains. And again, right at the heart of that was rare earths. So what's changed between 2011 and 2018 in relation to rare earths? And the biggest thing is demand. The electric evolution is here, and I think all previous speakers and everyone in this room aren't challenging the electric vehicle evolution. It's all about when will it get to 20 million units or 30 or 40 or the numbers. So that's the critical comment. And, you know, rare earths is right at the heart of it. And the next slide I put up is the fact that lithium had the benefit of Elon Musk. Elon Musk has gone and educated the world on lithium, and everyone's an expert in lithium now. So everyone knows all about it. Tesla's changed the world. But we must remember there's so many other elements that make up the electric vehicle. And importantly, rare earths are at the heart of it. And companies like Tesla, but they're not the big drivers of volume, have moved from the induction motor to the permanent magnet motor. And it's that motor that drives the electric vehicle that has rare earths in it. And so, you know, the rare earths are a neodymium iron boron magnet. The neodymium comes from the likes of Lynas outside of China. And then you have dysprosium. And so dysprosium is a key element in the vehicle. Dysprosium allows the magnet in that permanent magnet motor to retain its energy, retain its charge at a high temperature. So it's a real key ingredient into the permanent magnet. Right now, 98% of production comes from China. So there's a real risk in the supply chain of relying on China. And so Lynas has been one of the real critical steps in trying to disrupt that and have volume of production outside. But that's for light rare earths. And in heavy rare earths, and in particular dysprosium, we haven't seen that. The real big driver in the thematic is the electric vehicle, but let's not forget about the wind turbines, the industrial robotics. They're all drivers of demand of dysprosium, but we focus on the electric vehicle. 100 grams of dysprosium is required in every electric vehicle. So if you work out what you think the demand's going to be for electric vehicles in the future, times that by 100 grams, and you'll work out what the requirements are of dysprosium. Currently, there's only about 1,800 tonnes of dysprosium produced annually. Current spot price for dysprosium is about $180 a kilo US. So at 100 grams, that's about an input cost of about $18 into an electric vehicle. The magnet makers have done a back calculation and says that the electric vehicle could afford approximately $1,500 in each electric vehicle before they really need to think about substitution. So it's about $150 input cost. Now, not saying it's going to go there. I don't believe you'd want it to go there philosophically, but there's an enormous gap between the current spot price of $180 to the $1,500 that I was talking about moments ago, if you like. So a lot of huge upside in terms of dysprosium. That's a supply-demand curve that's been published by Adamus Intelligence. The 30 or 40 page document that backs that up is available at the booth outside, and Mark Torrey, our CFO, is there with myself. What this highlights here is the curve of applying the build of the EV market and the demand driven off that from electric vehicles. So you can see that there's a significant gap between demand and supply. Those two dotted lines are showing about dysprosium thrifting. So there is a lot of work being done to reduce the amount of dysprosium being used in each one of these magnets. So there's cases there that shows that dysprosium, thrifting of 15%, 30% reduces demand, but there's still a gap between supply and demand. And again, interesting, and I haven't got time to go into it today, but the other issue with supply is it comes from illegal and legal sources in China. There's only 5 companies that have got approval to mine dysprosium inside of China. So our strategy as a company, we've been on the rare earth project since 2010. This is a greenfield discovery in northern Western Australia, east of Halls Creek. The company's invested $175 million in the last 8 years, and that's been through exploration, project evaluation, mining approvals, and now the development of our pilot plant. Now, for our previous speaker, once you see the video shortly, you'll see that our definition of a pilot plant is slightly bigger than most people's visions and expectations of a pilot plant. So with where the market was at back in 2015, we completed our definitive feasibility study. There was no way we were going to build our full-scale operation. That required an investment of $329 million. The rare earth market pricing wasn't there. So we had to stop and rethink about how we were going to develop and commercialise this project. So we decided to go down the test pilot plant, and it's probably one of the best decisions we've made because we are in the cusp of production. We're getting respect from the industry. We're about to go through qualification, and that's going to make it a hell of a lot easier for us to get to that full-scale operation. So the pilot plant, we call it a 3-year pilot plant. We've actually completed mining, so we have a raw material in front of the pilot plant of 3 years. It's 10% the size of our full-scale operation. The slide's wrong, I apologise. We'll be in production in June, not July, and we'll be developing a lot of experience in mining, processing and offtake. So cast your mind back 12 months ago and think of what you've achieved in the last 12 months and what you've done. That's a picture of our project. We just took the top of the ore body off in the bottom right-hand corner at Gambit West, and that's where we're planning to put our pilot plant. That's a picture from 2 weeks ago. So we committed as a board on the 18th of April last year to go ahead with that. So at that point we hadn't ordered, we still hadn't completed our detailed engineering design. In the space of 13 months, we're now on the cusp of completing the build of a 2-stage processing plant in the middle of nowhere. It's got a beneficiation and hydromet process. So that's our pilot plant, and the amount of respect we're getting for that is simply on the back of the fact that it's real and we're about to get into production. Before I go on that, so it's a beneficiation hydromet plant, so we've got a 1% ore. We take it through crushing, grinding, magnetic separation and flotation. We produce a 20% concentrate. We then go through a sulfation bake where we add sulfuric acid at 1:1, heat it up to about 270 degrees, and we then go through a water leach. Then following that, we go through a series of stages of increasing the pH, get rid of all the impurities. We then go through an IX to take out the balance of our uranium. We then go through thickening, drying, and we produce a 52% mixed rare earth carbonate. So that's the product we'll produce by the end of next month. Our first shipment is due in the end of September to China. We're now already thinking about what next. And probably I'll just touch on one quick thing there is the refining of the project. We're looking at ore sorting. We've done a little bit of test work about 3-4 years ago, but now we've actually got real products so we can actually test it properly. We're doing it through NAGROM in Kelmscott, Western Australia. And so there we believe that we've got the potential to double the grade to go through that plant. So instead of 1% ore, we can get to 2%. I talked about a 20% concentrate. We believe we can get a 30%, which means that we might not have the constraint in the sulfation bake process to take the volume, if you like. So we could potentially have a lot more units of output from the amount of capital we've invested. That's about $55 million we've spent on that pilot plant, so it gives you a scale of size and money we've spent. The other thing we're looking at, is full-scale operation. Some people define that as our definitive feasibility study, which had a capex of $329 million to produce 300 tonnes of dysprosium. That pilot plant's going to produce 50 tonnes of dysprosium at the nameplate. Defining full scale is not about spending $329 million, it's about producing the amount of output that we're talking about. So 50%, we add ore sorting, we do a few other things. Maybe that pilot plant could do a hell of a lot more than we originally thought it could do. Maybe we only have to spend a small amount of incremental capital. Maybe we build a second one like that, and next minute we could get to the output we're hoping to get to without spending that $329 million. So we've got enormous upside and potential on this, on the project we have up there. It's an 11-year mine life, but the upside is huge. We've got 60 kilometre by 30 kilometre geological feature. We've drilled 12 targets, converted 6 of those into JORC compliant resource reserves. All of them are open at depth, and we've got 170 new targets. We've spent $35 million on exploration, probably about $8 an ounce if you convert it into gold, to just give you a flavour of the success we've had to date, but huge upside. The key is downstream processing, and I think I heard the last bit of the CRU presentation about downstream processing. No different to lithium and all the rest of it. In Australia, we're brilliant explorers, we're brilliant miners, we're good at beneficiation, and we just stop there, get revenue and move on, if you like. We've got to push hard and go into downstream separation. This is where we really fix the supply chain around the world. Right now, Northern Minerals, when we ship our first product in September, will not solve the issues of the rest of the world's needs of rare earths, because no one can buy it apart from China, with the exception of one customer in Japan. There is only 2 plants in the world that can separate heavy rare earths, one in Japan, one in France. So we have to go to separated product, and that's where we're going to capture the market in the US, in Europe, in Southeast Asia. So right now we've just put out a request for quote for 3 types of technology out of the US to evaluate those this year for CapEx, OpEx, recoveries and so forth, and we're looking at solvent extraction, of whether or not we find a Chinese partner that will help us build a solvent extraction plant outside of China, so we can have a supply chain outside of China. So that's important for us. 17 was a huge year for us, but you know, it was a bit hollow because we haven't finished the job yet. So by June 30 we'll build the plant, first shipment in September. And Mark Torrey, our CFO, is going back to university because he's spent the last 5-6 years just accounting for cash coming in from shareholders. We've now got revenue, so it's a bit of a complex task for him to work through, but it's going to be an exciting one. Research and development's been very good to us, so I'd ask everyone to go and lobby the federal government for the stupid decision they made in the federal budget to reduce the amount of R&D, because without R&D that plant wouldn't exist. There wouldn't be 80 construction jobs, there wouldn't be 50 people working up there, we wouldn't have DY to the market. So I challenge Malcolm Turnbull and his merry men to really rethink what they're doing. We've got a few other tasks there. Corporately, market cap of about $120 million. We've had a huge uplift in liquidity, so we're sitting at about 2.5 million shares traded on a daily basis, about $15 million in the bank. And we have a couple of major shareholders who are privately high net wealth Chinese individuals that support the company, have about a 33% holding in the company. So in conclusion, the pilot plant will be completed in June, production in June. This is a critical component of the electric evolution. So if you believe in EVs and you've got over your excitement for lithium and you love your cobalts, don't forget about rare earths, because they're as critical as the rest of them. So try to buck the trend and not follow all the little bubbles going around. There's some real key themes that you should maybe get back and beat all the sheep out there. We will be a significant contributor to the to dysprosium supply outside of China, and you've seen that 98% will start to influence that and bring it down. We have a quality management team, and I thank my COO for a great job he's done in building that plant in such a short period of time, and I thank you all for listening to me.